All right. Good morning, everyone. We are back with Fractional Friday. I got Joseph Cacciapali here. So, morning, Joseph.
Good morning. How's it going?
Good, good, good. So, our other guest, Earl, who's running a little behind, so he'll jump on when he is ready. But I can't wait to hear his story. I watched some of his video on his YouTube channel. So, if you can, go check out Earl's channel, Joseph's channel. It's in the chat, but I'll put it back in. But go subscribe there. But Joseph, so how's everything going on the fractional real estate side? And maybe you can fill us in. What was the reason to you thought Earl would be a good fit to bring on today?
Yeah, before I will give you a good intro on Earl, but the only other thing I wanted to talk about before that I think is really interesting going on is this week was the second week that Arrived Homes had their secondary market open. And so this is where people that have bought invested in their properties previously could sell shares, peer to peer to other people. This is only the second week of trading that they've had, and this time it's been a lot more interesting than last time, at least from my perspective. We saw some really deep discounts, and so one, I don't think it's great for the platform when you have people that are willing to sell out of their investments at 40% discount sometimes, and even right now there's still several that are 20%. But on the flip side, for us investors, I think it makes it so that platform all of a sudden is an interesting opportunity where it wasn't necessarily before, based on their stated returns. Um, I just wanted to mention that because I think that's kind of the most interesting news this week. That's like a little bit different. But yeah, I wanted to hopefully we get Earl on. He mentioned he's probably going to be 15 minutes late or so, but he is, if anybody who is in the Lofty Discord is going to know who this is. But if not, I'll give you a little bit of background on him. He is a real estate investor first, found fractional real estate second, actually came to the Lofty platform as someone bringing his properties to the platform and listing equity on there. He very quickly, when I got on Lofty, I identified him as being one of the, and so on Lofty, they refer to those people as co-owners, right? Because they're coming and selling equity, but they're required to hold a certain amount forever, right? And so those are the co-owners. And I identified him as one of the co-owners that I really, I felt like I could trust his stuff a lot more than others because he has just a very high level of transparency. He posts bank statements, mortgage statements, all, keeps running tabs on absolutely everything in a public Dropbox that we can look at as investors in his deals. Now that might sound like the type of transparency you'd expect across the board, but unfortunately on Lofty's platform, that's just not the case. They have the co-owners have pretty wide latitude as far as the level of transparency they provide. And so for that reason alone, I started following his properties quite a bit. He's brought I believe he's brought more properties to that platform than any other co-owner or investor. He's got I don't know, 4 or 5 Airbnb properties that are multifamily properties. So, and they're all in a row. They're all attached to each other. In Where are they? In Albany, New York. I've invested in a couple of his deals, just complete transparency there. I think that they're not things that I would buy. Like me and him, you will see, probably we disagree on a lot. He has a much different level of risk tolerance than I do. But I really appreciate, I think he operates with a lot of integrity and transparency, and a lot of the stuff that I think is important when you're going to invest with somebody. Um, and and so for small little chunks, I don't mind, investing in deals that he do that are not necessarily deals I would ever do. Just because I trust that he's a good operator, and he's really proven himself to be able to work his way out of a lot of different little problems, be a good creative problem solver. He's also taken over management as a third party manager, a very large number of the non-performing properties on Lofty's platform. Um, I don't even know what that number is. I would guess it's somewhere around 30 or 40, but maybe not quite so many. I'm not exactly. We'll ask him. And I think we had talked before. This is a platform that I am mostly working my way off of, because a lot of different reasons, but one of them is there was a property manager that was able to go through and really just ruin a bunch of properties. And a lot of people saying he committed fraud. Whether or not that's true, it's not my place to say. But at the very least, it was gross incompetence and really caused a lot of problems for these. And so there's been a few different people who've jumped in and tried to fix these. Um, and he's one of them. I think three different people basically divided them up, among themselves, to try to help out that situation.
Yeah,
One of the
so we're talking about Earl, who's going to be the other guest on today. He's running a little bit late. He does have a YouTube channel, so you can also go check him out and subscribe there. I think before we go any further, excuse me, the one thing is you're saying he's putting properties on the platform to extract equity, because I think a lot of people may be tuning in here. That's sometimes the trouble with some of the rental properties that they do have. They're finding out, how do I tap in, to the equity of these properties? So maybe you can. So Lofty, if I'm correct, that's the only one that you can put a property on and get equity from, or how does that work?
there's another one called Fractional app that is a little bit more, that you can also raise equity on, but Lofty is really the main one where you can do it that in a way that it really seems like a fractional real estate platform where other people can just invest once the deal's already there. But yeah, so all they do, he's already got an investment property. He takes that property, moves it into a new LLC, and it's a specific type of LLC called a DAO LLC, which stands for decentralized autonomous organization, something like that. And it's the ownership interest in that new LLC is what is tokenized. So that's what you buy little pieces of on the blockchain. And so it's just that's just how uh, they just use it to use the smart contracts to keep track of who actually owns these little pieces. And so then he lists it on the platform. There's a listing page. They give the info on the property, and then anybody can go on there and buy pieces of it. Typically $50 at a time, is what they're originally listed for. And then that ownership stake gives you a percent ownership of any net operating income that's distributed. You get your percentage share of that. And then at some point, if the property is sold, you'll get your percentage of the equity as well. And so yeah, I think it's a really interesting tool from investors' perspective who are looking to raise equity. And that's why one of the reasons I want to talk to him today, because I think he has more experience with that than just about, well, probably anybody, I think, because he's done it with his own property several times. He's also helped a number of other people bring properties to the platform too. Lofty is not easy to work with, at least from my perspective, but from talking to a lot of the other co-owners too. And so having somebody who's really kind of figured it out and there's knows some of the tips and tricks on how to do that, it's what I'm hoping to ask him about.
Yeah, so I watched one of the videos you did with him also. So like you said, it's not just like a traditional long-term rental, right? He puts on the platform. I think he was doing like a Airbnb. I think he was doing pad split. Some of these properties he put on, right? So he's putting these properties on the platform, and then people can, like you're saying, it shows up. They can look at it, and if they're interested, and they can, invest or buy tokens in that property. Correct?
Right, exactly. And he's got a couple long-term rentals, but most of what he has is, yeah, these a lot of the short-term rentals. He does have a pad split or maybe two. Um it is, so it's a little bit interesting because he manages a lot, and then some are his own, and then some are like he manages them but he helped them come to the platform. So I'm not always 100% sure which ones he'd claim is really his and which ones are that he's just really managing. Um, but and that's one of the things that I think is interesting about what he's doing is I think he's basically tied his entire portfolio to Lofty at this point. But has come up with like a lot of different ways to use the platform, um, to either I think initially he did it to help buy out a partner in one of his deals, right? And, because he had, I don't know, I'm not 100% certain of that, but he had talked about, he had a liquidity problem trying to get rid of other partners in the past, and that's one of the reasons he really likes Lofty, right? Because you can put your entity on there, you never have to sell any of it if you don't want to, but if you have partners in that deal, so then as soon as you tokenize it, their interest is also token, so they can just sell out. So one of the kind of interesting deals that they recently did is him and 6 or 7 other partners bought a property, renovated it. They just owned it together, and then they brought it to the platform. And so then any of them who wanted to could sell out their, parts of their interest, but they don't necessarily have to. But they, even if they were all holding at the moment, it gives them access to more liquidity than you would have otherwise. And, and that's one of the things I'm critical of Lofty. It's not really true liquidity. If they wanted to sell out their whole stake, they'd have to take a huge discount. But it also, um, it provides the accounting function, right? They just send the money to Lofty, who then splits up the rents monthly. And so they, it's providing a little bit of an additional service for people that are, bringing their own deals, even, as partners where they don't really need some additional capital right now. I actually think that is the best use case for Lofty at the moment. I think that a lot of the recent deals that somebody's just brought on there and just tried to like sell out 90% of their equity, there just hasn't been it's not a very liquid market right now. So some of them are only getting very little sales initially, unless it's just an amazing deal.
Yeah, interesting. I like I said, I watched a couple of the videos on his channel and the one you did with him. But yeah, he has, like you said, he is more from the real estate side first, right? And then
Yes,
he
yeah,
found
absolutely.
Lofty or fractional real estate, and then he started using it for different reasons, like you're saying, putting his properties on the platform. But one of the reasons was, I guess he was in some partnerships, right? And he's trying to figure out how to liquidate or exit or make people whole and whatnot. And he actually, I think you guys were talking about too, how he actually, I think, listed one on the MLS, right, to kind of get rid of the partnership. Was that what you guys were talking about? Like,
Oh, I don't know, because that the one that I did with him was a long time ago. And I didn't, to be perfectly frank, I didn't fully grasp how Lofty worked back then. I mean, that was one of the reasons that I got him on there, right, was to help explain it to me. So I don't remember all the details of that discussion, but it is um that sounds familiar, but I'm just not sure.
but you have many years also in real estate, also in San Antonio and whatnot, right? So is that something you find people have a difficult time though when they do start doing partnerships or getting into partnerships and trying to figure out how to exit strategies from that standpoint?
Yeah, 100%. I mean, the biggest issue, and it's one reason that I've almost never, with very few exceptions, almost never raised equity capital when I've done deals. I sometimes will use private debt, but the biggest reason is you're just never going to need that cash. You're never going to have the same exact needs as far as liquidity as your partners, right? And so somebody is going to want to sell at a time when somebody else is going to want to hold, almost always, right? And ideally, as the whole partnership, you're waiting for the perfect time to sell, but rational minds are going to disagree on when that perfect time is, even just looking at the market. And then on top of that, you'll have people that have just other places where they could put some capital, and it's at much higher rates, for example. And but you might not, right? So your partner might have that opportunity and you don't, so you don't necessarily want to sell. And so you can sell your partnership interest, and that's something. Actually used to know a guy that his whole thing was he'd go around buying people's, limited or buying their partnership interests in real estate, but he would always get such a big discount because it's not liquid at all. So I think selling, pieces on Lofty is certainly an improvement over selling to that guy. I mean, but it might just be, you might just sell smaller pieces at a time depending on how attractive your property is.
Well, like I mentioned too, so before Earl gets here, but like you said, you have many years in the real estate transaction side in San Antonio. What are you seeing currently in your market, and how do you think what do you think rates are going to do? Do you think it's going to impact your market quite a bit?
So I never make predictions about anything. So I don't know what rates are going to do. I think, if they go down, I don't mind telling you what I think would happen there, which are obviously. So right now, I probably know, I mean, not, without exaggeration, 300 investors who are interested in buying properties in this market, but are waiting for rates to come down. So when they do come down, those 300 people, plus everybody else that I don't know that's in that same position, are going to be out looking for properties. Um, so I think that is a terrible strategy right now. It's just sort of just waiting. I think if you very strongly believe rates are coming down, the right move is to buy something now because you really believe you can refinance, right? That's not I'm never trying to make a bet on, or I'm never trying to do something that I have to be right about what's going to happen in the future, right? Because who knows if they'll actually come down. I believe they will, but I don't know. So, I think the right thing to do is this is such a buyer's market right now. Like there's so many deals that are sitting on the market for 90 days, 120 days, you know, there's plenty of deals to be had where you just have to go out and make a lot of offers to get deals that work with today's rates. And then if you are right that rates are going to come down, well, then you're going to get then you refinance, and property prices, they have to go up. I mean, that you can't have all this new demand from people who are waiting for lower rates without that impacting prices whenever that does actually happen.
So how busy does it have to get for you to get off the couch? And
I got off the couch a couple times this week to look for properties for myself. I'm shopping for something new. I had one of my, I mostly in most of my money is in private mortgages. I had one pay off. I had hoped that I'd be confident enough in fractional real estate that I would just dump it all into 4 or 5 sites. I'm still not there yet, so I decided, I'm gonna at least this one go and put into another property or two. So I've been out shopping. It is not for me. I like being on the couch. But it reminds me we had that little back and forth, and I wanted to talk about that on X.
yeah,
So
okay.
there's the discussion about there's always people telling you got to get out of your comfort zone, and I think this is terrible advice. I think you have to figure out where in your comfort zone you can make money, because there's everybody, like, and basically it's another way of saying you have to focus on your strengths. Like if you figure out a way to take what you're good at and what you like doing and make money doing that. Like, I mean, I make a stupid living from my couch. Like, people should not pay me the amount of money that I get paid. And I enjoy, and I only, like, there are a couple things in my job that I have to do that I don't like. I'm not a systems and processes guy. I don't like doing, the paperwork part. Um, but so there's always going to be that little bit of discomfort of things that you have to do. But I think that, like, you get a lot of people that are like, hey, this is how I did it, this is what worked for me. And you see it a lot in real estate where they're like, make 100 cold calls a day, go do door knocking. And that stuff didn't work for me, but I figured out things that did work for me, that are in my comfort zone, that are aligned with my strengths. So that's where I was going with that. I know you're like, oh, it's something I really disagree with, that you just hear a lot in social media, right? Like, people just think this is how I did it. You should just do it the same way. You just have to push through the discomfort. But I just don't buy into that.
No, I agree. I think it's more so that it's talking about the comfort of just kind of like the comfort of a paycheck, like
Yeah.
comfort of just being that rat race and getting that paycheck to make sure you pay your bills, and so from that standpoint. So
Right. Right.
but yeah, it's like I said, it's all in fun, and I love the back and forth, and like you said, it's to make you think though, and you do have a great point that, and I would say that I would agree more with that then so the whole, in the one rental at a time thing, there's been this whole kind of back and forth because Ryan Pineda talked about,
I've been following that. Yes.
yeah. So, his thing is almost like throw everything against the wall and see what sticks, right?
Right.
And that's his kind of approach to things. And like I said, definitely, like what you're saying, I definitely agree more with that. And find, work to your strengths instead of trying to try all these different things and the shiny syndrome object, right? And
Right.
so kind of like that. So I definitely agree to your standpoint on that as far as find what works for you and double down on that. And yeah, and then work to your strengths. But yeah, it's just always fun. X, I tell people X is a great place as long as you're able to kind of filter out the uh nonsense on there too, right?
Right. Oh, absolutely. No, I mean that is my go-to platform. I mean, obviously I've got the YouTube channel, but I spend more time on X than anywhere else because I just like that it's like you're welcome to drop into other people's conversations. That you're expected to talk to people you don't know there and just be like give your random opinions, which I like to do. Where like a lot of other social media platforms, it's more about like having the connection first and then doing it. So I don't.
That's definitely why I don't really go on LinkedIn very much, but I
Right.
definitely feel that's what LinkedIn is about, right? It's more like that
Yep.
connection, or you're trying to sell something, or you're trying to raise money, or so that's what the feeling I get on the LinkedIn side. But hey, good morning, Matthew Ellis. Haven't seen you here before, but thanks for tuning in. We are our other guest Earl is running a little behind, but right now we are talking about real estate, fractional real estate. We're Joseph's kind of digging into and helping me understand it a lot more. But if you haven't, go check out Joseph and Earl's YouTube channels also and go subscribe there.
And I did
Um,
want to let everybody know that this is my fault. I'm the one who invites people here that don't show up on time. I'm 2 for 2 now, so wanted
well,
to just
well,
take
well,
credit
they're
for that.
probably on the couch like you too, and getting off the couch and is a
Oh,
challenge for
I
them.
don't know. I think, but Matt last time he's a super hard worker, and Earl. I mean, I don't know. I feel like he works like a ton. Now, a lot of it is probably he's definitely doing. I don't know if it's couch work. I imagine him being more like at a computer somewhere at a desk, but I don't really know. But yeah, it is. He definitely has a lot more hustle in him than I do at the moment.
I'm just messing. I know his wife had a procedure maybe, so I know he was running behind. Hey, we got the Bucky's cup too.
Yeah,
Um, but yeah.
it's the only respectable cup to have on your channel.
No, yeah, someone else. I had my hat on the other day when I was out, and someone was talking to me about it, and they're like, "Yeah, we haven't been there yet, but everyone tells us we gotta go." And I was like, "Man, yeah, it's amazing." And then I don't know if you ever see the pay, because it started in Texas, right?
I think so.
Yeah. Have you ever seen like the pay, like what they pay their employees and whatnot
Oh yeah,
online?
yeah.
Yeah.
They have those signs out front a lot of times. Yeah, they pay them really well.
Oh, well, Charles, I don't know. Well, maybe next time, or maybe we can, but I don't know how easy it is to buy something on, are you fractional? Are you able to run through it, or are you able to run through it and not maybe process the transaction? Like, are you to run through, like, look for
Yeah,
something and,
it's super easy. So
yeah,
let me share my screen and then let's see. How do I do that? I don't remember.
let me see if there's a platform. If Charles, if you're still there, is there a platform that maybe you wanted him to look, or have you been looking at one, Charles? If not, just go to the one that you. Oh, there's our guest.
Oh, is he here now?
I hear
Awesome.
him. Oh no, that's your screen. Never mind. You're sharing your screen. Hold on.
Yep.
There we go.
All right. So I don't have the live up on here anymore because I just can see my page. You can see my lofty asset overview right now. Is that right?
Yes.
All right. So this is one. Um, I guess I should have stopped or share this tab instead. Okay. Yep. So this is a property that I've just been buying pieces of pretty regularly, so I don't mind just picking up a little bit more while we're on here. You'd normally find them. I guess I should have started with the marketplace, right? So you'd normally find them here. you'd go through. I like to use this list view, and then you can sort by price if you just want to be a bottom feeder and buy the absolute cheapest ones, which is a good place to start. On Lofty, most of the money I make is buying very discounted tokens. Every single one of these tokens started off at $50. So somebody lost money so that I could make money. So that's just something to keep in mind. It's very nice of them to do that. But yeah, this is one I've been accumulating tokens in for a while. I own close to 12% of it now. But yeah, all you do, you have your account. I have some crypto in here already. You do have to fund it. You can actually just use a credit card if you want to, but I'm just going to have one token right there. Do a market order, which just means I'm buying it there. I'm using funds from my Lofty wallet. You just hit the little preview order because that price can change because it is an active market. It takes a little while. This is actually one of the things I've heard them talk about. They don't like that this takes so long sometimes when they're trying to do demos of it. But yeah, so okay, I'm just getting one little token of this. Just hit submit, and I think you'll see the little pop-up. I don't know if the way the share screen works, if you'll get it or not, but you get a little pop-up that says something like, you just bought real estate. But it takes a minute.
So what is the shortest time frame you've held something on one of these platforms, I guess?
20 minutes.
Oh, wow.
So, and I'll explain to you why. So I just bought that token using the automated market maker. So that's what creates this starting price here. But if you click on the order book, people can also just put in what they call limit orders, but they don't act like limit orders do in the stock market. They don't match up. So like this person right now has a sell order. They're trying to sell 100 at 25 bucks. If sometimes you'll see there'll be a limit order that's significantly below the market order price. And so when that happens, you can buy the limit order token and go and sell it into the market and just do that like within a few minutes. So I used to do that. Well, I used to do it more often. Now there's a lot of people that have caught on to that. I actually think somebody has a bot running that's doing it. So I don't really do that much anymore. But these prices swing very wildly. Like, I mean, you can see, this is not the best example, but let me go to the marketplace. Because I just did this last week where, oh yeah, so Winkler, this property, yeah, I mean, you can see, it was down into the $7. So let's see, and this is just going back to August 18th, right? So this is just 30 days, and it's gone everywhere from 11 bucks down to 7. And sometimes this chart doesn't work great either. So I bought some at this bottom and then sold at the top, and that little peak last week, which I held it for like 2 days, and it wasn't a ton of the thing is, you can't do it with a ton of tokens at a time because it's a very thin market. So as you buy tokens, it moves the price quite a bit. So,
I'm not sure if they're coming in from your channel, but Roman Fox, I see, is tuning in. It says live buying. So, Roman, thanks for tuning in.
all right. I'm going to go ahead and shut this down now. So I can get back over there. I think I'm not sharing my screen anymore. Is that right?
Yep. No.
Okay, good. I'm just going to check in and see if.
Interesting. And then what? So maybe is there something that you've held for the entire time you've been maybe doing fractional real estate on any of the platforms so far?
I do. Yeah. So I bought one of and Lofty is the only one that I'm actively trading on. Every other platform is either a buy and hold platform or it's some designated, period of time that you hold it. Although now Arrived has their secondary market, so you can do it. But so I do have one of Earl's co-ownership properties was one of my very early purchases, and I've held it through till now and slowly built up a position whenever the prices dip. That's what I think is really interesting about it, right? You can do the due diligence on that property once, figure out, okay, what's the price that I'm happy to buy into this at? And then whenever the price dips to that, I can pick up whatever tokens are available. Um, and so this is one of the things that gets me about Lofty. I very much like the concept and the theory, and like when you talk about it like this, it sounds fantastic. But the execution of it and the transparency on a lot of them, and just the general like quality of a lot of the investment options are not great. So I want to make sure I'm not overselling it, because I do love the ability to buy something for $8 today and sell it for $11 tomorrow. And and it's not like you're just buying one token. Usually I'm at least buying 10 tokens. Some of them I have a couple hundred tokens in. Um, but it is, so there's definitely opportunity, but it is like I mentioned, every single one of those deals that you're making money on, that you're buying at, single digit or low double, in the teens, somebody bought that token originally for $50. So somebody lost 80% plus of their value uh, before it became a deal for me to want to buy. So it is, sort of a cautionary tale, right?
Um, so like I said, Roman Fox, unfortunately, I cannot type in my reply since you are coming from someone else's channel. If you want, you can always bounce onto mine and subscribe to mine, and then I can reply. But your question was, what platforms am I invested on? So currently, I am not invested on any of these fractional real estates. I'm trying to use Joseph as leverage and learn more about these platforms and kind of dabble with them and see what they're all about. But yeah, Lofty, I've looked into Mogul. Who else have we had on so far on the
We had Saul's Lot. That's
oh,
who
so
we
yeah,
talked
that's
to
right.
last time.
Yeah.
And those are the ones. I don't know if we ever talked about ground floor, but I mean, I always think Mogul is the best place to start if you're just a regular, if you're a real estate minded person, right? You want to buy something that looks like you're investing in a real estate deal. I think they are the cleanest, most, as far as that's what you're getting with them, right? And you're getting professional people that are picking deals that are deals that I would be happy to buy in real life. That's one of the things I mentioned. I've been out there shopping for my own deals this week in real life, and it just is such a good reminder of like, it's really impressive that they can bring a new property to the platform just about every single week. That's as good as they do find. Um, when like it's hard to go out there and put together deals like what they're finding. So.
I did have another question. So, like, I know from the beginning you've kind of mentioned having the real estate maybe background or coming from the real estate space, you feel like you have a maybe a slight advantage in a sense because to evaluate the properties. But when
Yeah.
you're trading it like this in this short
Yeah.
time frame, do you see these properties like if you found a deal that looked good from the real estate side, breaking it
Mhm.
down, do you feel like it follows that pattern from the trading side of it?
So I think the real estate knowledge on Lofty specifically, what it's doing is helping you protect your downside. So I can buy that $15 token and be very comfortable knowing that if the token prices don't go back up, I can push for us to sell that property in real life and net $25, right? Like understanding what the real value of the real estate is on the other side of that token is what makes me feel comfortable jumping in and out of a lot of these, because I know it's really hard to get hurt if you're willing to hold it long enough to get it to a sale and you're buying at a very steep discount, right? And so um, you definitely see, one of the things that I think people didn't realize is the values can go to zero, right? There are instances where maybe the LLC has some debt. There's been massive repairs of the property. Like there are instances where you will have no value left in that LLC, or virtually no value, right? And that was something that I think shocked a lot of people the first time that instance came up. Where they're like, "Oh, we're getting nothing for this property." There was one that got condemned. This is actually one that Earl tried to take over and fix. And I think we'll ask him about that. If he did just email me and say he should be getting on soon. Um, but hopefully he's not having an issue now, because that was like 5 minutes ago. But
Yeah,
anyway,
I didn't. I saw his email too, but
okay,
we'll see.
but it is, it's one that basically to repair it to a level that it was going to be rentable again was going to cost just more than it would, way more than it would be worth at the end of the day with that property. And so they couldn't even give the lot away. They tried to give the property to Habitat for Humanity. They didn't want it. They tried to give it to a fire department to just practice to burn it down, and they were like, it's not safe enough for us to do that. Which sounds crazy, right? But so this is, that's somehow that property managed to make it onto the platform though. So
Wow, interesting.
yeah.
So yeah, like I said, we are waiting for the other guest to come on. He's running a little bit behind, but if you did want to go check out his YouTube channel, Earl's YouTube channel is in the chat. Joseph's channel is also in the chat, so you can always go subscribe there, come back here, hang out with us. We're waiting for Earl, but yeah, just we kind of were talking also about getting out of your comfort zone and whatnot. But how is your YouTube channel going?
It's coming along. I really slacked off this week. I haven't been feeling well, and I've also been spending a lot more time off the couch looking at property. So I slacked off a little bit posting, but I am still pretty consistent almost every day putting out a new video. And I think I've passed 660 subscribers, something like that. Honestly, like that number, I'm not too concerned about. I'm really using it to drive traffic to the Discord that I've set up. That I'm really trying to build a community around fractional real estate, and that's going really well. Like there are people all day, every day in there talking about Lofty and Mogul and Ground Floor and Saul's Lot and bringing up other platforms that I've never heard of. So all kinds of different stuff. And that was really my goal, in doing a lot of this. So I don't know. I think that's. I don't think I'm ever going to be a professional YouTuber like you. I think it's just going to be uh, a good way for me to make some new friends.
So Roman Fox, thanks for jumping over to this side. I believe this is for you, Joseph. Your continued buying for Raymond is needed to push the sale and do two things. One, clear one legacy property from the platform. Two, pay off the universal lending DAO and accelerate its shutdown from sale proceeds. Not sure if you want to dig into
I
that.
100% agree with you. So one, I want to just mention what two things are he's talking about. Calling it a legacy property. Um, Lofty's had a couple different iterations of how they do things. The older properties where people brought them to the platform and just sold out completely, they didn't have to stay on as a co-owner. That's what most people have referred to as a legacy property. A lot of people think that represents most of the problem properties on the platform. I actually think if we start to look at it, there's almost as many co-ownership properties that are a problem as legacy properties. But it is my goal to help get all of the bad properties off the platform by pushing for real world sales. So that is it is my most likely exit strategy with that property that I just bought a token of, is trying to get them to sell that in real life. The universal lending DAO that he mentioned, it is a entity on the Lofty platform that will lend money to the other property entities. It has had all sorts of problems, and the main one is one, it's had some accounting errors that Lofty is taking a very long time, but it seems to be they're about to fix. But the other is they just made a bunch of loans that properties have not been able to pay back at all. And this particular one that I've been buying has one of those outstanding loans. So if it sells, it'll pay that back. So there's a lot of people that are invested in the ULD, the Universal Lending DAO, that are really looking forward to the sale of a few of these properties that have big loans outstanding to that DAO. Which I think is super interesting, because you actually see some people that will start to invest in and try to influence the behavior of certain property DAOs just so it can affect what's happening in other ones that maybe have a loan to it, or like the ULD, that's loans. But there's some other of the DAOs that have made loans to each other and whatnot. So it's gotten pretty convoluted, and I think to a certain extent there's going to be a little bit of a stop to it, but not entirely. Earl is the mastermind behind a lot of that. Man, I hope he shows up. If not, we'll try to reschedule him for another time.
Oh yeah, absolutely.
Because it is, he's someone I talk to quite a bit through the Discord, but never really just like sit there and talk in real life and like ask him a whole bunch of stuff about what he's doing. So
So I
hopefully,
believe Falcon Strike 21 is tuning in from your channel. Says, I was thinking of investing in F.I.R.E, but I'm worried the platform will go bankrupt. This is what happened to realty shares in 2018.
yeah, I mean that is one of the risks I think with all of these platforms, right? Like you just don't know. Um, it's one of the things I try to mention often as possible, but sometimes I just sort of gets lost on me because I assume people think about it. But there's what I just refer to as platform risk, and it's one reason why even though like Mogul is my favorite, I'm still not putting my whole net worth on Mogul, right? Like, and I mentioned I've got a big lump sum payment, and I'll put a little bit more on there, but I really would like to see there be 5 or 6 platforms that I like as much as I like Mogul, and then I'd be happy to spread it out, right? Because then if one of them fails, you'll have other ones. And I don't have all my eggs in one basket. Uh, but the other thing is too, it's a lot of these now. That entity is, even if the platform fails, the entity that holds your property is still going to exist, right? Because this isn't like it's not a REIT where you have a ton of properties owned in a single entity, and the whole thing could just fail. You don't have like this. You might have a very difficult time coordinating with other owners and figuring out what to do with that property and liquidating it. So I'm sure you'd end up losing money. But it's not, you still own a piece of just this property, right? That's the only thing that's owned in each piece that you invest in, versus in the past, a lot of the options that people had were REITs or funds or something of that nature, to where if the company failed, it just failed. Like there was nothing left for you. So I think that it's a little bit safer than that in that regard. But on the flip side, there are other risks, because of this, the fact that it is just you're buying interest in an entity that owns just a single property.
So yeah, Falcon Strike 21. Thanks for stopping by. I believe you might be coming in from Joseph's channel. So if you want, go check out Earl's channel, my channel. Go subscribe, please, and then you can always jump back to Joseph's channel. But Roman Fox also says it's a slow burn, Joe.
Yeah, I agree. I think that some of them. One of the things, it's kind of funny to think about. Like, it seems like it, right? But I think Lofty in particular makes you feel like everything should happen quickly. You get paid daily rent instead of monthly, right? Like it's broken up over time. You are able to trade in and out of properties in the same day. At the same time, I've only been investing in fractional real estate for a little over a year at this point. And I've done tons of transactions, so it is moving slowly, in certain regard, but compared to other real estate deals that I'm typically doing in real life, my average holding period on Lofty is a very tiny fraction of my average holding period in real life deals. Like, I'm somebody who, I'm not a big buy and hold believer. I like to turn over my equity as often as I think it is, you're able to maximize your returns. And so I think in real life, my average hold's been somewhere between 3 and 5 years. Um, because I don't like to have lazy equity in a property, and I think that's how you do it. But yeah, when you compare that to sometimes days, sometimes weeks. I mean, I have one property that I invested in just about a year ago now on Lofty, that we are just now getting, it's just now under contract to sell in real life. And that feels like it's been forever. But in the grand, but compared to traditional real estate, it's actually a pretty short hold period.
Man, I want to dig into that one day now that you brought that up. Because you've touched on it quite a bit that you probably are maybe more on the conservative side, kind of risk adverse, but you're also talking about turning over these properties to use the equity or not have lazy equity. So I find that interesting because I feel like a lot of people that are maybe on the risk adverse side, or they're just kind of set it, forget it,
Yeah.
hold it. So no, I like to dig into that one day. Shoots, I heard the sound of someone. I don't see his. Oh, there. There he is. Hold on. There is Earl, the
Hey,
man
hello.
of the hour.
Of the 2 hours, give or take.
No worries, man. Things come up like that. But yeah,
Yes.
thanks for joining us. We just been kind of shooting the shit right now, talking about fractional real estate and whatnot. Joseph did kind of give us a little background on you. I watched a few of your guys' videos.
Okay.
But if you can, maybe give a quick 60-second spiel or so about who you are and how you got into fractional real estate and what your maybe real estate background is.
Sure. Yeah. First of all, is my video okay and audio?
Yeah, you're good, man.
Okay, it's fine. All right, cool. Because I can't see. Your side's not loading for my end, but that's okay.
Oh,
Um, so yeah, I've been investing in real estate since 2017. I graduated from NYU with a bachelor's in computer engineering in 2016, and realized that I kind of realized that uh, doing your 9 to 5 job, or even if it's a fancy, well-paying engineering job, isn't gonna get you to financial freedom or financial independence. I learned that the wealth to use real estate as a vehicle, as a means to get to financial independence, and started investing in 2017 with my first property, which is the 724 Third Ave triplex that's now on Lofty. And it just kind of went from there. I posted about it on my Facebook, and other people joined along. And my second, third, and so on properties were all partnerships. So I've been very familiar both the ups and downs of investing with other people, and for the most part, I've been minority owner. I've been a minority owner in all of the properties that are now onboarded on Lofty, and all of my properties across the board. And I got into fractional real estate investing in I guess technically 2024, the beginning, when I first launched 88 Madison Ave, and the rest of the Albany properties from there. And primary motivation was liquidity for exit liquidity for the investors who I no longer wanted to work with, or they no longer wanted to work with me. You get this same partnership stuff that we deal with in fractional real estate, except that fractional real estate is a much larger scale. Um, and that just allowed, I think that was the missing part of Am I? Hold on a second. There's an error on
oh,
restream.
you're good though.
Okay,
We
okay,
we
cool.
can see you. Yeah,
All
you're
right,
good. But
it just said it's a try reloading page. So yeah,
okay.
the primary missing part of investing in real estate was the fact that it's an illiquid asset, right? And being able to make that a somewhat liquid asset is really the most powerful thing about fractional real estate investing. That, and the fact that there's currently, at the moment, arbitrage deals that Joe and I are very familiar with, and where the secondary market has simply diverged from its real world value. And these are not shit coins. There's still underlying tangible property value attached to them, so long as the legal system holds up. and and as long as you recognize that, I feel like there's no reason to buy anything else outside of fractional real estate, if that is the same as like buying properties at the bottom of the 2008 recession, or actually a lot of them are even better than that.
I like that. It's interesting. So like I said, Earl does have a YouTube channel. So it is in the chat. So please jump over there, subscribe. You can always come back over here. But it looks like you have people that already follow you. So you have Roman Fox here, says Earl is in his natural habitat, the car.
Yeah.
And there is, I'm not gonna even try and figure out what this person's tag
That's
is.
Limus.
Limus. Okay, Limus says, haha, Earl on the road. So they are
Yeah,
tuning.
I'm
Yeah.
on the road. Yeah, I'm always on the road, because you should be able to invest in real estate from anywhere, right?
I love
And
that.
digital nomad is the lifestyle, and being able to invest from your couch, as Joe loves to do, or invest from the road, is as I love to do.
See, so you
It's a
do know
beautiful
Joe
thing.
well, Joe on the couch well, right? So,
Yeah, it's a beautiful thing.
Joe, do you have any questions for Earl?
Well, one, Earl, I was talking a little bit about what's the property that you were trying to get the fire department to burn down, and you couldn't even give it to Habitat for Humanity. What property is that? I couldn't think of which
Solid
one it
question.
was.
That was 1236 West 7th Street in Davenport, Iowa.
And that
Neighborhood's
was
good, pretty good lot, double lot of opportunities for growth there. Not the neighborhood necessarily, growth on that particular parcel.
I was just using that as an example of how a lot of people were surprised that your value could come very close to zero.
Oh, it's
You
negative.
can hold real estate and have your entity be worth zero or very close to it.
It's negative. It's worth negative because its land value is 17 grand and it costs 22 grand to tear it down properly with permits and everything. And of course, if you burn it down, it's going to cost less than 22 grand. But the problem is that the fire department wasn't even willing to enter the building for controlled burns practice because the foundation it's condemned. The foundation is shot, and a lot of properties like that are like that in Davenport. And we just got dumped on. A lot of lofty investors got dumped on back in 2021, 2022. So this is just an unfortunate case where, on the buyer's side, the investor's side, people did not do any or sufficient due diligence and noticed that. And of course, on the seller's side, I personally think they were being dishonest. And it's just like when I buy a single share personally, if I'm buying a single share, I have to act like I am buying the whole thing. So that's going through a lot of due diligence. Now, I personally will buy a single share without doing the due diligence of uh as if I were buying the whole thing. But you should do that. Do as I say, not as I do, right? You should buy as, I mean, like, especially if that single share means a lot to you. Single share doesn't mean a lot to me for the most part. It's $50.
You've
But
done this before, the
right.
YouTube thing. You're covering yourself.
Right. I mean, Brownfield, yes, I bought a share without looking into it. $50. Yeah, okay, cool. And now it might be worthless, or maybe it's still worth 40 or 30. But it was one share. And I think, at scale, if everyone just buys one share, but you have thousands of people getting burned on one share, maybe it's not as huge of a deal. You kind of spread out the loss. You socialize the losses, so to speak, in that regard, if it's a bad investment. But yeah, no, there was some writing on the wall for a lot of these properties. And I think now the opportunity lies because those other people who have bought early on at full value have given up and just want out at whatever price. It's like they're trying to not go into the sunk cost fallacy. But there's as a result of that, there's opportunities for gain from being the exit liquidity for other people, right? Where as long as you know the fair market value, if you actually do the due diligence and analyze a property as if you were buying the whole thing, you can find a lot of deals where I don't need to buy the whole thing. I'll buy, I don't know, 10 shares, 100 shares, 5%, whatever, to 15%, and arbitrage that gap between the secondary market and the real net asset value, the real fair market value of the underlying asset. But don't buy 1236 West 7th Street because its real net asset value is negative $5,000.
And just to be clear, that was not one that Earl brought to the platform. That's one of many that he has tried to take over, to help people that were. How many are you managing now as a third party? It's a lot, but
yeah, Limones's website Lofty Assist shows, I believe, 45, maybe 50 now. I count 103 doors across my entire portfolio. Now some of those doors are not on the platform yet, but yeah, it's a fairly large portfolio at this point, just in a matter of months, because no one seems to have the expertise or desire to want to take over these legacy properties that are poorly mismanaged.
yeah, and I think me and Earl, we disagree on lots of stuff, but I think we agree on as far as like that there's a lot of value to be had in buying these cheaply, and for many of them on the platform, the right answer is for us to just whoever owns those tokens today to just sell those into the real world market, because for whatever reason, they're just too tough. They need somebody who's the next door neighbor to manage that property. Not us.
Yeah. Even the ones in Cleveland that are being locally managed by Align Properties Group have challenges. Like I had my contractor go out there, fly out there from Albany to Cleveland the other week, and do inspections basically across the board. And for the occupied ones, we only did exterior inspections. But yeah, they require. I mean, yes, they're cheap properties in the Midwest. The problem is that doing any repairs on them costs more than the house, and no one wants to do that, psychologically speaking. So they just fall into massive disrepair. I think the better way of thinking, it's more of a mindset thing as an investor, is like, well, I got this house for free. It's okay if I spend 50 grand on it because I got this house for free, right? Not that, oh, this house is worth 50 grand and I have to spend 50 grand to fix it. But I can't sell it for much more. I can't sell it for 100 grand. So I shouldn't put 50 grand into it. Like, I think that's a bit of scarcity mindset. But on the other hand, these properties are challenging and will continue to be challenging, largely because, as others have called it, squatter central. They're just not the areas I would have invested in. And that's part of why I didn't buy any tokens when Lofty first launched their fractional real estate platform, because they were all crap. I mean, like, I guess, yeah, right? Like, I wasn't on the Discord, I wasn't on Telegram, back in the day, but I'm glad I wasn't.
Earl, I know Joseph has touched on it before. I believe you started more in traditional real estate first,
That's
and
right.
he feels like that is kind of gives him a little advantage in this fractional space. Would you kind of agree with that?
Oh yeah, absolutely, absolutely. Being a traditional real estate investor and knowing the ropes about how properties are traded, how business operates. I mean, real estate investing isn't a property business, it's a people business. And yeah, we're property managed. I don't know who posted that earlier, but why are we always managing people rather than the properties themselves? But yeah, that's all the business is managing the properties and the people that run them. So if you are a novice, as most people are in the fractional real estate space, novice to real estate investing, and you're kind of dabbling in it like you're dabbling in stocks and equities, then you might be at a disadvantage because you don't understand how the numbers work. So, I mean, I would recommend a simple book, The ABCs of Real Estate Investing by Ken McElroy. That's a perfectly fine book to start off at understanding how the numbers work of real estate investing, because it's a little bit different than analyzing a stock on the stock market. In some ways it's similar because it's fractional and it trades like stocks or bond portfolios, but in a lot of ways this is still real estate, right? There are tenants, there are people living in these houses. You can't operate them as if they're just pure businesses, because you're affecting other people's lives here.
Joseph, you have anything else for Earl you want to dig into, or?
Yeah, one of the things that I think, Earl, Mark's audience is primarily just people that are interested in real estate investing in general. And so, some of them I think will become just fractional real estate investors and buy stuff, and that might be a good place for them to start. But a lot of them maybe have properties and could benefit from accessing that equity. I mean, despite my, my general feelings about Lofty, I still think there's opportunity to be someone like you who's using it in a way where you're using it to access equity. Can you talk about that a little bit? There's one like the Quitman deal you did, I think, is really interesting. But anything around that you could share?
Absolutely. I think what Lofty really needs are professional real estate investors, and what Lofty provides is that it's an IPO, it's initial public offering, or an ICO, initial coin offering of real estate, of real world assets. And if we understand the real world asset, but we don't understand the tokenization side of it, well, then Lofty provides that value. And what it really does, allowed me to do at least, is spread out the diversify and spread out across the country the equity that I had in just a handful of properties, so that I wasn't so concentrated in a single market like Albany. And I was able to spread out across, you mean Arizona, we got California, and other parts of the country and the world, including Hawaii now. The Quitman deal was another way where I was able to syndicate the funds needed to acquire an entirely new property here in Denver, and we're able to raise the funds to with a small group of investors that is effectively still a privately held partnership, but owned by a DAO entity, a decentralized autonomous organization. It's neither decentralized nor autonomous until it's launched on Lofty, of course, but it's that's no different than a regular traditional syndication, right? A PPM, or 501c3, not that, that's a the Reg Ds, the crowdfunding. It's no different than that, but of course everything from a regulatory perspective is completely different. But as far as functionally, no different. But so it gives you the best of both worlds there, and be targeting it for launch on Lofty allows us to quickly, well, not quickly, but allows us to eventually parlay those funds and rediversify them into other investments, or perhaps go do the next deal, launch it on Lofty, go do the next deal, launch it on Lofty. And I mean, like for the Allow a Place one, that wasn't even a rehab project. Yeah, we funded and furnished it, but we launched it on Lofty basically prior to even closing on the purchase. So it was an acquisition straight onto Lofty.
Oh no, we lost him.
Oh, yeah.
That reminds
Oh,
me.
he's coming back. There he is.
You are in Hawaii, right?
I was talking.
Yeah,
I was in
I'm in
Hawaii.
Hawaii.
Okay.
I'm in.
Sorry.
No, you're
Am I
back.
back on? Okay, cool. Yeah.
Yeah.
Cell signal isn't very good in this parking lot.
Yeah, so I was just mentioning when
Yeah.
you were not here. Mark is in Hawaii, so if you ever need him to stop by Allow a Place, I don't know how close he is to it.
It's in Waianae, which is about 45 minutes outside of Honolulu. It's in Honolulu County, but apparently it's too far for.
That's when there's no traffic.
Right? Yeah,
Yeah.
I mean that's true. Farrington Highway can get backed up. But like it's also too far for a lot of people in the city. I mean, yeah, it's 20 minutes from a Lowe's and a Home Depot, which is great for when I need to get stuff. But vendors are like really unreliable out there. So if you know anyone, I could use some really good contractors, plumbers, etc.
Go to Waianae though.
That area, yeah. Right, no one wants to go to Waianae. I'm
No.
like, it's not that far from Honolulu, but okay.
It's not that.
Oh yeah. I mean, yeah, just a little bit south. There are a lot of homeless people, etc. Yeah. But like that's the case anywhere. I feel like. I mean, in Albany, our best performing assets on the platform on Lofty are. I'm 2 blocks away, 3 blocks away from shelters and squatters. Like.
Yeah,
it's just par for the
absolutely. Course. Yeah, no, totally. Waianae is actually it's like a great community, but it does have its bad parts. But that's where if any of you follows MMA, that's where Max Holloway's from. So that's kind of why that community is pretty well known. But yeah, it's the same thing. But the only issue with there is it's like one road in, right? One road in, one road out. So if there's ever like a traffic accident or anything, it's like a bottleneck and it just gets backed up. But yeah.
Could always get a boat, a little kayak. Right across the beach. I'm right across the beach. So walk to the beach and then kayak out.
Yeah.
Now we had to pay close attention to the tsunami that was coming. That came a couple a month ago or so, and fortunately we're high enough elevation and we didn't have to worry about any flooding. And high enough elevation being 13 feet above sea level, but still it was sufficiently high that we were not impacted by flooding. But yeah, it was a bit of trying to get the tenants out and to a safe location. I believe they ended up hiking up the mountain to get to high ground.
Interesting.
Yeah. Fun times, fun times. But yeah, that's investing, right? I mean, like I said, there people who live in these houses, and this isn't just a business. You got to take care of the property, and you got to take care of the people in them.
Sorry, I'm just putting your guys' channels in the chat right now. So I just want to remind everyone they have YouTube channels. So go check out Joseph's channel, Earl's channel. Yes, Flavio, there is squatters in Hawaii.
Right? There's squatters in New York. There's squatters in Chicago and Cleveland. There's more squatters in Cleveland. There's more squatters in Chicago in some areas, right? But yeah, I if you're a traditional real estate investor, I would certainly implore you look into launching your property on Lofty. It's very straightforward, and it allows you to tap into some of your equity without having to get a loan, and it allows you to diversify and also keep the property for a long term, because you got into this business as a, if you're a buy and hold investor, you got into the business to buy and hold, but sometimes you just need that cash back out, right? So that you can go buy another deal. So I definitely implore you to do that. And there is like a not referral, not their regular referral program, but there is a separate thing where if we refer other investors who launch their own properties, it's like $1,000 or something that Lofty pays us, which is nice. So make sure you drop my name or Joe's or
Definitely, if you're going to do that, just reach out to Earl, because he's gonna one, be a good source of knowledge as far as, having done it several times on his own, and also just put you in touch with the right people and everything. Don't go straight to Lofty if you want to do that,
That's right.
because
That's right.
you definitely want to get, I think Earl will take a little time with you. He's definitely helped other people get on there.
Yeah.
One other thing I wanted to mention, and you've mentioned diversifying a few times, and I've seen you do this in some other co-owners, where you'll swap equity once you've listed a property.
That's true.
That's something I wanted to mention, just as an opportunity that I think is really neat, right?
It's so cool. Yeah, I swapped equity with Craig for Umland, where I gave him a little bit of Alawa and 86 Madison, and he gave me a little bit of Umland, and basically 1-to-1. Alawa should have been worth more, but oh well. Basically 1-to-1 swap. I've also done some, prior to launching, I was able to get some shares in Noah Simon's property, 9 Country Club Lane. So, kind of building my own reserve of other people's properties, and especially ones that I manage, having like a good stake, because it aligns the incentive, right? I've got ownership in the property, true ownership in the property, so I can care about it a little bit more than some of the properties that I manage that I don't have significant shares in. I might have 1 or 2 shares of some of the legacy properties, but that doesn't really align my incentive as an owner. It still aligns my incentive as a property manager, of course, where I make money on the top line revenue. So if you are an excellent property manager, that's what we need on the platform. Don't give me all the properties. Cannot handle them. Don't give it all to Alec. Like, decentralization is the core tenet of the Lofty platform, unlike some of the other fractional real estate investing. So if you like decentralization, then go to Lofty. If you don't like decentralization, you'd rather have traditional experts, etc. There are other platforms, as Joe would mention, Mogul and others, where they have expert real estate investors that are running the company, and they are running the properties, etc. But if you'd like the chance to actually learn how to do this stuff yourself, Lofty is the way to go, because you can literally take any of these properties that are mismanaged and turn them around. So it's a great opportunity for you as a budding or experienced real estate investor.
And that's what Earl mentioned earlier. Lofty really needs like 50 or 100 more Earls, right? They need people. I mean, they really do, right? Like,
They really
at
do.
this point, they need you so much more than you need them. Like, you'd be perfectly successful without them, and a third of the platform would probably be struggling. I mean, I don't know. Maybe somebody else would have tried to take over those properties, but I mean, the platform really needs more experienced investors who are willing to be hands-on when something goes wrong with some of them, to actually jump in and spend their time and create solutions. And he's getting I mean, maybe not adequately, but he's getting paid for some of the time he's spending on there. Like if you're, especially if you're, invest a decent amount in some of the discounted tokens and then you take over, there's opportunity to make money doing it, right? It's not, they need him, but it's also, it's self-interest, right? Like he actually, I think there's opportunity for a whole bunch of people to come. And that's one of the things that I think, if that changed, if the user base of Lofty changed, even if they still had all their own, accounting and whatever issues that they have, I think it would drastically change the platform in a way that then just more, that some of the more passive investors would do okay again too, right? There's just the ratio right now is so far off of what we need for it to really, benefit the average person on there.
Absolutely, 100%. Yeah, we just need more people to step up and actually take ownership, like true ownership. One, you have true ownership in terms of beneficial interest, but you got to take true ownership in terms of responsibility, right? Responsibility is the ability to respond, and if you don't respond, if you don't even respond to a governance vote, right, that you're supposed to, then are you alive? Like, or is this just play money for you? And if it is, well, then yeah, I guess you were fine losing it anyway, and I'll be happy to scoop them up. But yeah, there's lots of opportunity on both sides to make money as a passive investor, but more importantly, make money, taking true ownership and becoming more active as the governance technically requires us to be.
I just want to say good morning to some people tuning in now. They're jumping in from one of the school accountability calls. So I'm calling them a bunch of sellouts because I know where they were before this. But no, thanks for tuning in. But, I think Joseph did bring up a great point. A lot of my audience probably is primarily real estate, always looking for different asset classes. But I think one big thing that's interesting, like Joseph mentioned, is tapping into that equity for these rental properties. So I'm still kind of trying to figure it out. So like, let's try to run through like a simple maybe scenario. So let's say someone had a maybe valued at 200,000 property. They had 100,000 debt on it. So there's 100,000 in equity. If they put that on the platform, they would get that roughly 100K equity up front, or you have to wait till people are buying shares of it?
Well, your equity is already there. It just turns into something, a bunch of numbers technically, but a token, as we call it on the blockchain. Like we don't really try to. It confuses people when we mention blockchain. So Lofty doesn't try to do that, and it's just a database, right? A blockchain is just a database. So now this database. So okay, if you're familiar with with traditional partnership LLCs and 1065s and all that, typically your organizational or your operating agreement dictates like how much percent of each of the LLC does each person get. Well, instead of that being a table on a piece of paper, it's now a table in the digital world, a database. And that table, we can adjust and change the rows based on trading it programmatically through smart contracts. And a smart contract is a contract that is programmatically enabled, so we don't need to like DocuSign it. And by executing those smart contracts, we're able to adjust the percentages accordingly. So if someone can buy in and someone can sell out their shares of the LLC as they wish. So that equity gets converted into this digital thing. And if you want to convert it into dollars, that's where someone else has to give you dollars in exchange for that equity. And that might be slow, that might be fast. It depends on how well your property performs. If you're in the double digits of cash and cash return, then you'll have much better success than if you're in the single digits at liquidating some of the equity. And also, how much equity do you need out of it? Do you need 5 grand, 10 grand, 20 grand? Like, it's going to take longer if you need more. But if you sell at the right price, you can drive up the volume and I was able to cash out like 724 3rd Ave last year in order to parlay those funds into the new acquisition of 804 South Quitman. I cashed out like 40 grand in a matter of like a week or two because I liquidated them at like $45 a share, give or take. And that so yeah, like when you're selling below the $50 par value, you know, a lot of people see discount and buy in. Like, why wouldn't you take 10-20% off real estate? Like, why wouldn't anyone buy that? I mean, I don't know why people aren't buying 60%, 80% off real estate right now. Some of these properties that are in the process of being offboarded off of Lofty are listed on the MLS, and if we get a buyer for 80 grand on Coit Street Coit Road, whatever it is, if we get a buyer for 80 grand on Coit, we have it listed for 99. But if we get it for as low as 80, that's still 4x its current value. It's, you know, market's valuing it at like 22 grand right now. Now, of course, you know, you got slippage and everything, so the price goes up the more you try to buy in. But yeah, I mean, there's just so much arbitrage opportunity there, and then also just onboarding your own properties, share the love, spread the wealth, and decentralize it. And do I feel like I'm losing control of the property? To a certain degree, that is always a big question that traditional real estate investors like, well, hey, if I put this on Lofty, well, then I'm going to lose operational control. Well, you're still the property manager unless you don't want to be. And so you have all the standard operating, the property manager control. The only thing that you would lose is key capital decisions, such as refinancing, such as selling, where someone else could literally offer make a proposal like they did yesterday to sell a property that you onboarded, deplatform it, sell it to a completely, you know, third party buyer. But, you know, if they don't have support of the majority of the super majority of the owners of it, then it's not going to pass anyway, right? But if they do have support, well, then really it should just be sold anyway, right? And if you retain somewhat of a controlling interest, you can still sway those votes one way or the other. So you are giving up some ownership control and capital decision control, but you're not really giving up owner. We need you to continue managing the property as you have been, get it to the point where it's performing, right? Like the fact that you put it on Lofty as a performing property because of your operational expertise. So you should continue to do that. We want you to continue doing that. We don't want people to dump it on Lofty and then walk away. That was the problem with the legacy properties. They dumped it on Lofty, they walked away, and now the operations went to shit. And those properties are in disrepair and in dire needs.
One thing that I wanted to add to that, Mark, to just in answering your question about, you know, how do you sell it out? How fast does it sell out and whatnot? Is it depends a lot on how much people trust you in the platform, right? So like when Earl brings a property to the platform, he's a known entity. He's done this with other properties. He's in the Discord regularly talking to other investors. It's much easier for him to sell equity. There's a couple other people like that. If you're bringing your first property on there and you're thinking you're going to do that, I would suggest spending a couple of months, maybe jump in the Discord, talk to other investors, invest in other people's deals, build some relationships, and then have some support in people that know you when you go and list your property. Because one of the things that you see quite a bit is there are people that are investing in deals because they trust Earl or they trust Alec, one of the other people who's, you know, has a bunch of stuff, more so or just as much as they like that deal itself. And yeah, it does look like we lost him again.
Oh, there he is.
I just switched. There we go. Now I can actually see you guys. I'm like, what am I doing? Hotspotting to my laptop. I can't see your faces. Now I can see your faces. So.
But All Nighter Hider said he liked that explanation from you, Earl. I guess maybe another question I have is, so let's say you do put your property on the platform. Is there, and I guess, and let's say you don't, you know, liquidate it in a, you know, whatever, like you said, maybe a week you got that 40K. Is there like a holding cost to keep the property on the platform?
No, absolutely not. No. It's just an LLC that happens to be now have hundreds of members in it. Like, no, like the LLC is still an independent entity. That's what Lofty is really driving the point home here. They don't control the property. The only things they currently have the technology behind is rent distributions. You know, like who are the investors, knowing who they are. So they do the KYC on your behalf, basically. I suppose if you really needed to know everyone's names, they would have to give it to you because you're a member of the LLC and you should know who everyone else is. But they know the KYC. They distribute the rents. They do. Oh yeah, they handle the governance, which is right now could be improved for sure. They handle out like the vote, like if a member wants to distribute a vote, for the LLC, but the LLC is still an independent entity. It's not owned by Lofty, not controlled by Lofty. Lofty has the managerial right to sign on behalf of the LLC for capital decisions where an LLC would need to sign, like a loan or sale or whatever. But besides that, yeah, what was the core of that question?
No, like just if you were keeping your property on there and you weren't getting the
Oh, yeah, no, there's no holding costs or anything. The standard cost is like they do handle the 1065s for you, so that's beautiful as long as they do it right. And they're depreciating the asset accordingly based on the market cap, all that. So they have CPAs, they'll handle that, and that's like $200 a year billed to the LLC. And then there's it's part of the $750 a year in annual fees because they also will handle the LLC registration, maintenance, like the annual filings, the registered agent, things like that. Some of it is now on the property manager, such as myself, and but they do have like bulk deals with vendors that handle registered agent things specifically. So that'll give you a little bit of savings for the LLC since they have like 200 of them to deal with. Yeah. There's no other like holding cost. It doesn't cost any. Lofty makes their money on the trading fees. So as long as your property continues to be active and active in the sense that it's actively traded, there's buying interest and there's selling interest, then they continue to make money. They're just a marketplace otherwise. So it doesn't cost anything to onboard besides the initial like quick claim deed, inspection fees, appraisal fees, standard real estate deed transfer transaction costs, and those are given back to you as additional equity. So you're able to realize that additional cost as value add. Well, it's a bit value add, but it's token back in your wallet, right? So you're effectively growing your capital basis, your cost basis in that property.
I want to say what's up to Nick tuning in. He's teaching right now, but Nick has started a new Bitcoin channel on YouTube, so go check that out. But Nick says people can buy fractional Bitcoin. Too many believe they need a full coin to make money. It's not true. Dollar cost averaging into it. And then he said, well, I guess when you bounced off a camera, he said, Earl went to go buy a coin. But there's everyone's channel in the chat, Joseph, Earl's, and actually I put Nick's one there. So go check them out. Go subscribe. You can always bounce back here. But yeah, anything else you guys want to discuss on this?
That's where we'll work hard. Can listen to everyone. Bitcoin. Yeah, Bitcoin. I love Bitcoin. A lot of people don't love Bitcoin, but I love Bitcoin. It's the balance between tangible real world asset that generates revenue and income versus just idle money, right? Your cash reserve, but cash I use loosely as as your liquid asset, and that liquid asset for me is Bitcoin. So the vast majority of my wealth is held in those two classes, and just a little bit of fiat currency in the middle to go between.
Interesting. Okay.
So there's definitely a barbell strategy you can play there, and starting a fund to capitalize on that. I know a lot of people, look at Grant Cardone's thing. They're doing Bitcoin real estate mixing. I know Joe is really against mixing the two asset classes, especially in a decentralized autonomous organization structure.
I just want to keep my Bitcoin safe. I just want to keep my Bitcoin safe. Keep it away from that real estate.
That's a good point. That's a great point. Solid point, because we've discussed this. You got asset protection, two different kinds of asset protection you have to worry about, right? Because Bitcoin can't be protected the way real estate can be, and real estate can't be protected the way Bitcoin can be.
The other thing
it's all good stuff, like multi signature wallets, right? Where you need a super majority to sign for a transaction to move the Bitcoin out of the wallet. It's a beautiful thing that you can do in the crypto world that you can't do in the real estate world. Well, unless it's tokenized real estate, I suppose.
Hyder says fractional Bitcoin is called Satoshi. A
Yeah,
Satoshi is to a
gonna say.
Bitcoin kind of what a penny is to a dollar.
Yeah. And 10,000 Satoshi equals $1, give or take. It fluctuates, right? At the 100,000 mark, 10,000 Satoshi equals $1. Maybe at some point in the future, distant or near or otherwise, that one Satoshi equals $1. But then we have bigger problems, I feel.
Yeah.
And so Earl has created a couple of things. He's created something called the Earl DAO, and he's also got this Earl coin thing that I don't know about at all. I think probably both of those are too big of a topic to jump into at this point, but maybe at some point we'll get you back on and do like a deep dive, at least into the Earl DAO, because I think I still have lots of questions about it that I think that probably and a lot of other people do that we could talk about.
Yeah.
Absolutely. Yep. One's a hard money lending DAO, basically, syndication fund.
Interesting. Well, before you wrap things up, why don't you give a quick, maybe like what is your YouTube channel about, and what can people find when they go check out your channel?
Yeah, absolutely. Yeah, I'm not too active on YouTube, not anywhere like you guys here. I just don't have time to make these videos. Too busy managing properties. But I do have had over the years a variety of videos revolving around real estate investing. It's financial hacks for the most part, strategies that slightly higher level strategies that anyone can play while they're playing in the real estate space or if they're starting out. So yeah, check that out. It's on youtube.com/EarlVance. And EARLVANZE, which is also my Discord username and X and Instagram, etc. You can find
I
me
think
everywhere.
I think your YouTube is actually, I think it's at Earl Co now. Your YouTube, the Earl
Both
Vance
will work.
one.
Yeah, at Earl Co will work as well. Yeah, YouTube did this whole thing where they basically required that you tie it to your real name, which was kind of annoying. Because it's like Graham Stephan is now just Graham Stephan, whatever channel it is. Yeah, Graham Stephan's a great channel too. I
Okay,
follow a lot of
if people
YouTubers.
want to reach out to you and connect with you, what's the best place they can connect with you at?
Yeah. Well, honestly, you should hop on Lofty and get on the Discord because I spend way too much time on there. But also, I'm
All day,
available
every day.
all day, every day. It's like my office now. I wake up, I open Discord, I'm in the office. And I'm available on X. I'm available on all social media, Instagram. Yeah, it's either Earl Co or Earl Vance. Co is my last name. People don't realize that, including Jerry, the CEO of Lofty, because he sent me shares on Lofty with like a missing last name because he thought Co was just like my company. No, that's my last name.
All right.
Facebook and Facebook Messenger. So feel free to add me as a friend there. But introduce yourself first, and yeah, X, all the usuals, social media. I'm on TikTok if you really want to go that way.
All right. So if anyone's here wants to connect with him, reach out to him. Let him know you saw him on this live stream. Earl's going to be I guess he's in his car driving all the time, and Joseph's known for his couch. But yeah, it was good having you on. We'll get you back on. And yeah, anything else you want to wrap it up with, Joseph?
I think we're good. Earl, I appreciate you making time for us. I know you have some stuff going on this morning, and I asked you pretty last minute to do this. So I really appreciate it.
Yeah, I'm happy I can still make it on. But yeah, I would love to come on again and provide some more value.
All right. Thanks for doing this, man. Everyone, have a